Yes, sir. Yo, what is going on, guys? Welcome to another video. In today's video, we are going to talk about everything that happened today regarding the stock market. Yeah, let's go ahead and get right into it, okay? So first news I want to get into is that insane Apple news that we got. So what happened was basically Apple actually came out and announced sometime last night before this morning that they told their suppliers not to follow through on their plans to increase iPhone 14 production. The reason why is because Apple no longer aims to increase production by 6 million units in the second half of the year as previously planned, according to numerous reports. Okay, now this actually caused Apple to tank about 3%, which is a pretty big move for Apple. As far as I can see right now, it looks like Apple has actually recovered a little bit, but Apple was down 3% starting at the beginning of the day when the market first opened. The reason why is very simple. It's because of the weak consumer. That is what the market is interpreting for this, and I'll tell you why. There have been warnings from a number of different major companies like FedEx, Walmart, Macy's that basically said that this Christmas isn't going to be as good as in previous years. And the reason why is because the consumer is getting weaker. The consumer is probably going to be weak during that time, which is not going to do well for their sales and their business. Why is the consumer going to be weak? Well, it's because of inflation. It's because of that pesky old inflation that the Federal Reserve is fighting. And so Apple is now, they haven't exactly said it yet, but this right here is signaling to the market that Apple is going to slow down as well in terms of their sales with the iPhone 14. Same thing with FedEx and Walmart and Macy's and their sales and different things like that. But it's funny because I actually expected the market to be down today because remember, Apple makes up like 7% of the S&P 500 or something like that. Apple is a big boy in that index, and especially with the overall market. And I actually thought, okay, well, if Apple is going down this much, the market's probably going to, not do well. And we're going to have another day of pain and another juicy day to buy that old dip. But unfortunately, your boy did not get the chance to buy the dip because as of right now, while I'm speaking, the S&P 500 is up 2%. The NASDAQ is up 2%. And the reason why the market is rallying today is actually because of this insane news that we got from the Bank of England. It is actually crazy. Like, this is major news, guys. And the reason why is because what everybody has been saying about the Federal Reserve in America, everybody's like, oh, Jerome Powell's going to pivot. Yeah. The Bank of England did that. They legit pivoted. They went from quantitative tightening to quantitative easing. They literally pivoted overnight, and we'll get into that. So what happened was, in a surprise move overnight, the Bank of England took emergency action and announced that they will launch a temporary round of quantitative easing. That is what you saw. This will be done via a short-term buying of British government bonds. And in doing so, the central bank warned of a material risk to the UK's financial stability from turmoil from the UK government bond market, which was sparked by the Chancellor's tax cuts and borrowing plan that that person announced last week. Now, the Bank of England is doing this in order to tackle a surge in the cost of borrowing. And it's also important to note that some of the country's largest pension funds had warned the bank that they were facing a cash crisis caused by the unprecedented rise in yields on government bonds. So basically, here's what happened, guys. We've talked about this on this channel, okay? There was a tug of war going on between the UK government and the Bank of England. Okay, the Bank of England is like, okay, inflation's way too high, which yes, their inflation is at like 10% or something like that over in the UK. It's insane. But the Bank of England is like, okay, inflation's too high. We got to raise rates. We got to end this. Meanwhile, the UK government is like, screw that. We're going to go ahead and do tax cuts. We're going to go ahead and borrow more money. And we don't really care about inflation. The Bank of England is like, what? No. And this caused investors over in the UK to say, okay, I don't know what you guys got going on here, but I'm selling. I'm getting out of here. So the British pound crash, the market over there is not doing well. There's been all kinds of crazy stuff happening. And that fear caused the Bank of England to panic. At least that's what some people are saying. Sorry, I thought I saw a bug. That caused the Bank of England to panic. And now the Bank of England is temporarily doing quantitative easing, something I never thought I'd see. And yeah, that's what you got going on. Now, I actually want to show you guys something very interesting and absolutely hilarious. Shout out to one of my followers who actually sent this to me on Twitter. It's Jeremy LaFave. What a surprise, saying something stupid. And I'm not even going to explain it. I'm just going to go ahead and play the clip so you guys can see for yourself. Here it is.
But even Apple, think about this for a moment. From what I'm hearing, iPhone 14 is selling better than iPhone 13 sold. If iPhone revenue goes up this year versus this let's call it 2023 versus past year. There's no way you can really get Apple stock down in any meaningful way because service is going to continue to grow no matter what. But when I'm hearing iPhone 14 is selling better than iPhone 13, how can you be bearish on that stock?
Good old Jeremy, huh? Good old Jeremy. You can always count on that clown to be wrong. But anyway, I want to show you guys something very interesting that I was looking at, okay? So if you notice, the S&P 500 broke the June lows. It went lower than the lows that we saw on June 16th, I believe. And then the Dow actually went lower than its June lows as well. However, the NASDAQ still hasn't gone lower than the June lows, which might start to make you kind of think, well, could this really be an actual temporary bottom that we are seeing in the NASDAQ? So that's something that you might want to think about. And then here's another step that I want to show you guys, something very interesting that could add fuel to the thesis that we still haven't bottomed in the grand scheme of things. I'm not talking about a temporary bottom, but I'm talking about the ultimate bottom of the bear market. You could actually go look this up. In the last like 20 or so years, maybe even all time, something like that, we have never seen a time where in a bear market has bottomed where the VIX was under 45. You can actually go and look this up. Normally, when the bear market finally bottoms, the VIX, which you guys know is the volatility index, goes at least to 45 or higher. As of right now, we haven't even gotten close to 45, I would argue. I think the highest we got on the VIX was what, 36, 37? We haven't even gotten close to 45. And normally, going back and looking at history, normally bear markets don't bottom until the VIX hits 45. Now, I've been saying for a while, I didn't think we'd go all the way to 45, but I have been expecting the VIX to hit 40 at some point. Now, I know a lot of people have been saying, oh man, this is a market crash. This is terrible. I've been saying this. I continue to say this. Even though things are bad, I would not necessarily say that the market is just downright crash. This little crash that we're getting, which don't get me wrong, we are in a bear market. Stocks are much lower than they were at the beginning of the year, but I'm still not feeling that 2020 pain. Now, I get it. This is my first bear market. However, this is not my first crash. People can say all they want that this is a market crash. I'm telling you guys, no, it ain't. I remember when I was working in politics in 2020. I'll never forget. I was working for a politician sitting in a campaign office, and my stocks every single day were just plunging. I'm talking about the March market crash of 2020. That was a real market crash. That market crash was so bad. Stocks dropped so fast. And I'll be honest with you guys, I sold everything. Now, I didn't go into my 401k and sell that like an idiot. But the stocks that I had in my like individual accounts, which at that time I was using Robinhood, I sold everything. I couldn't handle it. I could not handle seeing my stocks drop that fast every day. And I'm here to tell you guys, what you're seeing now doesn't even compare to that crash we saw in 2020. That was some stuff, man. That was some stuff. People really got annihilated during that time. That was terrible. But anyway, yeah, I am not so sure that we've seen a full bottom yet. However, I do want to say this. If we see a temporary bottom, and we see another bear market rally, not financial advice, but it might be in your best interest. I think it will be wise to take that time to reduce your risk, okay, and reposition the portfolio. Obviously, unfortunately, there's still too many of you guys who are still in these clown stocks. And there's nothing wrong with having some clown stocks if you're speculating. But some of you guys have way too much money in these stocks because you're trying to get rich quick. And it's just a bad idea. So all I can say is if we get another 20% bear market rally like we had in August, I would say, please, for the love of God, reduce your risk. Start chopping down some of those garbage stocks you have in your portfolio and start getting your cash build up ready so you can really buy these juicy dips that we just got over this past week. And especially if the market ends up going lower, which according to the history of the VIX, as long as it remains under 45, it looks like we have lower to go. Who knows if that's fully true or not, but just going after history, that's what it looks like. Okay. And so, yeah, overall, folks, there will be bear market rallies. Definitely make sure you use those as opportunities to reduce your risk, in my opinion. Yes, I definitely think we're going lower. Overall, the charts, the trend is still bearish. The Fed is still raising interest rates. The Fed is still aggressive. Things don't look good. But in the end, what is the overall message of this video? Well, it's what every single YouTube guru should be telling you, but they don't. However, on this channel, I will tell you, buy the S&P 500 and chill.